Welcome to TradeTheMBI.com. This is Jones Report is for the 6th of March. Well, we had that turnaround off of that deep move of the DOC. As we can see here, we dipped way into that bounce back mode. Sustainability was obviously going to depend on whether or not orange dipped below red here. It almost hasn't quite completed that. But that was a pretty spectacular run. Moving back above the 4,008, that caused short covering significant, and that was enough to bring it all the way back up to the 61%. Interesting that we have red riding up pretty close to the magenta, so we still haven't increased the 25. Any pivot of magenta below there at the 25 level, though, would certainly pull this back in place. And you can see that was a dramatic run back up on the extreme. We went from deep below the red line to not even making a green, but moving all the way up into the clear zone. So no resistance to that one. That was just literally shorts vacating the scene. You can see it even from the DOC here, where we have the cyan line moving well below the zero. They just completely exited that. They were more than happy with the fade that had taken place, and once we get to the 38%, I think everything was pretty comfortable with the idea of where we were at. From an NQ standpoint, looks identical, but just at a different position. NQ has been much stronger, and that was where we were looking that the support would take place from at that 50% move, and that's what we were projecting. Once the white NBI popped up, was a move back to the 50%, and sure enough, got that, and literally almost to a T, bouncing right off of that mode. And still, same situation though, hasn't completely retraced there with short-term buyers jumping in. We haven't seen that full dip of the orange is what I'm referring to back there. So we'll follow the shakeout and whether or not that can turn around into a positive territory, because that's where it's got to go if it's going to be any sustained move, and likely to still be turbulent. But you had fun money coming in a big way from the fourth all the way through, and so they started early buying up the dip as quickly as they could. Treasuries moving back a little bit lower there, obviously. Big supply of money moving into them. So it's interesting to me the timing of it, because it's right around when funds and that have a lot of extra money popping in place, and it seems like plenty of them wanted to move into the safety of treasuries, despite the fact inflation is still rising and yield is still a negative return. uh, Likewise, jump in oil. This is not about consumption, as we've talked about, but it will make up for the devaluation, and that commodities, I think, are going to remain high regardless of some of the supply demand issues. You're even now seeing gold making its turnaround uh, going forward here. Still red leading, so it could be a little bit more difficult. Like, I figured that gold would make an attempt up, come back, and it would be that second move that should have a little bit more sustained vitality. The euro, just holding it in place beautifully. Pretty big moves, though, when you look at it from a currency standpoint. I mean, we're moving, in some cases, three quarters a point, full penny back and forth in a given day. That's pretty extreme, and that just is a reflection of how kind of unstable the eurozone is, and it requires a step in to really bolster things, because who wants EU debt? It's an impossible situation. But then again, you're getting close to a situation, the same thing for the US. Who's going to want treasuries under the, umpteen trillion, but you got nowhere else to go. So, and of course, with the sanctions on Russia and things like that, you've shrunk the world quite a bit as far as available options in some cases. From a Bitcoin standpoint, it took a major nosedive there on the white spike. It had already been in a short setup, and this just followed through down to the 61%. Doesn't look like that's going to improve anytime soon at this particular stage. Same thing with ETH. Looking at that. Then we move on to the intraday charts. We had that buy setup that came through. Programs bought that, and that's been quite the run. So pretty effective from that standpoint. From a 5K, it was pretty much, we had the little fill back in, cutting out some of the short-term buyers. Wasn't enough to get down to that lower algo at the 39.70, and that just caught buyers. And once we got above that 92 level, that became clean support, and it just climbed right off that. And once the main open took place, it literally was a relatively boring day. And once we got above even at 40.31, proceeded up there, I would think that you would most likely get a pullback towards that 40.30. But if we're in a hyper bullish mode, it's probably not even going to break at all. But it would be normal to see a return back towards that 40.31. That's a real quick synopsis of it. I think that the amount of headwinds that exist out there are real, but you don't have that complete faltering like some were expecting. And I think that creates some problems because you don't have a completely negative scenario, but neither do you have a really great one. So it's one of those where I'm going to continue to watch what the dollar does, and that will really give us a broader view of how the world is perceiving the situation relative to other asset classes. And I think that's the difference that people have to pay attention to, is that money's got to go somewhere from all over the world. And if things are going equally, poor all over, then they're going to, gravitate to a variety of different locations. But if one particular area is doing better than others, it draws more attention. I think at this particular stage, the U.S. is doing better than most of the other investable locations, and so that's why you're going to see some additional put back into the U.S. markets. As always, though, I will continue to update you on anything relevant. We'll follow the charts. See you on the Skype chat. Trade well.